Matters radio show and the Connecticut Real Estate Edge podcast, along with Rob Weinberg. I'm Gary Byron. Rob, it's really good to see you.
Hey, Gary. Good to see you, my friend.
Thank you, man. How have you been?
Yeah, I've been really, really good lately.
Yeah, I'm happy to hear that.
Very optimistic.
Every time I talk to somebody, this is a breath of fresh air. I appreciate you saying that, because every time I talk to somebody, any that works in real estate they didn't necessarily have to be a real estate agent, but they work in, whether they do home inspections or appraisals or whatever. If everybody's, Gary, yeah, things have been better, and I'm like, well, okay, we all know things have been better, but I mean, it's kind of doom and gloom with them. And at least when I ask you this,
agree.
It's okay.
I mean, look. The industry's in a difficult scenario. We've come off these record years, which we've talked about, and now we're getting more back to the norm, right? Whatever normal is. And when you've come off record years, normal looks like failure, doesn't it? It looks like defeat. A realtor, for example, they might be used to selling like 3-4 homes a month. Now they're barely selling one. So, I mean, I look at it from a perspective standpoint, being in the industry now almost or over 20 years. I look at it from the standpoint of saying, okay, what's going on with the market relative to us? If the whole market is down 50% and you're only down 30, then I'd say you're not doing that bad. So the reason that I'm optimistic now is we're at the end of April, early May is the timeline, 2023. And I've had quite a few clients getting offers accepted in the last week or two. And it was a ghost town for a couple weeks there, which we'll talk about. But the thing is that when I look at the industry as a whole versus where I'm at, we're still chugging along. There's still people getting offers accepted. There's still people buying homes. There's still people getting mortgages and taking loans. So when we look at that, there's still opportunity. So we can't have that doom and gloom, because from my experience, like, that really rubs off on our clients. And as a real estate professional, whether you're in lending, a home inspector, appraiser, attorney, our clients and the community really looks to us as that beacon of hope. So if you're being negative, everyone around you is going to be.
Are people leaving the industry because it's drying up and they can't make a living doing it?
I mean, every boom and bust cycle we have in real estate, a lot of people, they get in when the getting's good, right? Sure. And then when things get hard, which right now is the definition of hard, they get out because it's not easy money anymore. And like, real estate lending, home inspections, real estate law, like, these are not just things that you get into one day and you wake up and say, I want to do this, and you're successful. I mean, it took me decades of cutting my teeth and getting the door shut on my face and getting no from clients and people that didn't understand or respect what I was trying to do. It took decades of that to get to the position that I'm in now, where I have some sort of local authority, credibility. I have the collateral to back me up as an expert. The book, the radio show, the podcast, thousands of reviews, thousands of satisfied clients. That doesn't happen overnight. And a realtor or someone in lending that just gets in, maybe has a year or two of experience, even if they're really, really good, when it gets hard, it's going to be a difficult scenario for them to say, I was making all this money, now I'm not. Should I even be doing this?
All right, so for every person that is looking to buy a home, there's got to be a person who wants to sell their home. And for that person selling their home, they're not going to go homeless. They're going to go somewhere. If owning a home, and let's say they got their mortgage at 3.5%, 3.9%. Let's say, I know it was 1.99 a couple of years ago. Let's say they bought their house before that, though, before the whole COVID thing and everything. They got 3.99%. And why would they want to sell their home?
Because they need to move somewhere.
But if you don't,
at the math,
but if you don't, not everybody has to move.
So there's really two ways to look at anything in life. You look at it logically or emotionally, right? That's it. There's only two paths. So you're looking at it simply from the logical standpoint. And you're right. If you just look at, okay, my mortgage is 3 something and I'm going to take a mortgage that 6 something, that doesn't make sense, right? On paper, why would I do that?
Why would I do that?
And that's okay. And that's what's been in people's heads for a while, since COVID. And here we are a couple years later. It's still in people's heads. The emotional part, though, is tugging at them. Every single morning they wake up, they walk in that kitchen. It's not what they want. Every time they go in that master bath and it doesn't have the shower they want, it's got that broken door. It's got, it doesn't
But
have
that's stuff
what
they can fix or they can remodel.
maybe they can, maybe they can't. But the bottom line is that eventually that emotion will tug. And people make decisions emotionally and back them up with logic. And there's this huge cohort of homeowners that are making this logical decision of it doesn't make logical sense to give up my home to take something more. Or take something higher, I should say, on a mortgage and on a price basis, right? But that emotion doesn't care about money. That emotion could care less if the interest rates are 20%. That emotion is what tugs at you every day when you say, I need a place to live that meets these basic necessities, these basic wants. It's not even needs, it's wants. And eventually, Gary, it may be 3 months, 6 months. I think it's going to be in 2024 or 2025. You're going to see these people finally, the dam's going to break, okay? Because eventually they have been waiting and hoping and praying that these rates are going to go down and these prices are going to come down and they're eventually going to have this. And when even now they're still hopeful, but when it doesn't happen, eventually they're going to say, you know what, screw it. It's time.
I remember having a therapist on the show, the morning show.
Okay.
During the height of COVID and how people were losing their jobs and people were starting to drink more. So I had a therapist come on.
Okay.
Did a great interview. And one of the things that she said was women make decisions based on emotion. Men make decisions based on logic. And actually use those words. And by the way, this is anybody, I don't want any phone calls and, Gary, this is from a female therapist. Okay. So there you go. Do you find, and let's transfer this to how it relates to home purchasing that you just mentioned. Logic, emotion. Do you find that more women buyers are buying based on emotion and more men buyers are using the logic avenue? To her point.
I guess you could agree with that because just generally speaking, women are more emotional, right?
Okay.
In everything. So I would agree, I would agree totally with that, without a doubt. Okay. But it doesn't mean that there can't be any emotional men buyers. And when you have a couple, a husband and wife, sometimes it's a nice balance because you've got one thinking emotionally, one thinking logically, and they can kind of put their heads together and get that balance. Okay. Right. So that I totally agree with your therapist on that. And what I've been seeing a lot lately and hearing is from people that have been in the market trying to buy homes, right? And they're hitting their head against the wall. And they're waiting, much like the home sellers that are waiting for the rates to go down, the home buyers, they're not really deterred, a lot of them, by the rates. They knew the rates were high when they looked at them, relatively speaking, 6 months ago, and they're in that same range today, right? So they're not afraid of the rate. What they're afraid of is the inventory. There not being enough homes, the high competition. Let's
talk about that.
Cutthroat. Well, that's the topic of the show.
I've been a victim of that. As you know, I think we said on this, was it this show a couple of weeks ago that I put a bid in for a home. The home was for $310. I put in a bid. I was going to do $340.
$330.
I did
right?
$330. Yeah.
What did it end up going for in the end?
Do you know what the highest bid was? $400.
Wow.
$90,000 more. Now, they didn't take that. They actually didn't take it. No, they took the second highest bid because I think they even knew it wasn't going to appraise for that. So
what was the second highest bid?
It might have been in 370s, close to 380.
So still way over what you offered.
Yeah.
So, today's show topic, and this is the right show for those that are looking for like a reality check on the housing market. Now, if you're listening to this show and it's the end of 2023, 2024, or sometime way out in the future, this may not be applicable, but we're in a really unique housing market right now. And I'm talking about Connecticut, specifically the state of Connecticut, in late April, early May 2023. We're going to talk about the housing market. We're going to talk about how crazy it's been and what a just jolt that we've seen in just the last 30 days. And what we're seeing, what we're foreseeing for the next couple months, and how a home buyer can navigate this to get their offers accepted.
All right,
I want to give hope.
Describe the current market right now.
Current state of the market, highly competitive. I would say probably, if not the most competitive, one of the most competitive markets we've ever seen in housing in Connecticut history. Low inventory levels. Like, nowhere near enough homes. It's not like, oh yeah, you'll see some of the same homes twice. No, there is nowhere near enough homes. You can go on Zillow, Realtor.com, Redfin, and any of these towns across Connecticut. Pick a random town, Newington, for example, and you're going to see those same 8 homes, right? Those same 15 homes, and they're not really changing. They're not really shifting. And what a lot of people thought is that we were going to see a big influx going into the spring. Well, here we are, end of April. We've seen definitely new properties come on the market. No one will deny that. There are new homes coming up for sale. There hasn't been that influx yet. Okay, so low inventory levels, high demand, and I think the most important characterization that we've seen this jolt over is that all of a sudden in Connecticut, we are seeing almost every house going over list price. Okay, and that was not the case. Even just a few months ago, I remember on this very show talking about we're actually seeing some of my buyers getting their offers accepted at list price or even lower. I had one get an offer accepted like 40 or 50,000 below list price back in like January. Now, wouldn't happen. There's just, again, supply and demand. We also saw a lot of properties where it was on the market for, 300. It was getting sold for 300 or 305, like right in very tight. Now, just in the last week, I've had 3 buyers go under contract. 3 buyers get their offer accepted. Every single one of those buyers was substantially over the list price. I'm talking about between 10 and 20% over the list price, okay? And these are not $1 million homes. These are entry level in most areas in Connecticut. 300,000 to 400,000 is entry level. That's the price range that these are in. I think the high end was 420,000. That house was on the market for 390. They ended up having to put it for 420 to get that offer accepted. So I don't think it's going to stay like this forever. But as a home buyer, as someone who's looking to buy a home in the next couple months in Connecticut, you've got to be sharp. You've got to be on your game. You've got to have this home buying strategy in play, because the reality check right now is that reality bites for a home buyer.
Yeah, well, ain't that the truth? There's got to be some challenges that home buyers are facing today.
Yes. So there's always challenges for a home buyer. I don't care what market you're buying in. There's always going to be challenges. Maybe it's inventory. Maybe it's interest rates. Maybe it's this or that, right? But the challenges right now is there's multi-layers of challenges. So you've got the interest rate increases. Fine. We've known about them. They've happened. Mm-hmm. They're here. They haven't spiked up to 8 or anything like that. They're in that same range they've really been. Some days they're higher, some days are lower. But for the most part, we've been in like this 6 to 7% interest rate range for most fixed mortgage products, whether it be conventional or government loans. You catch it on the right day, you might get an 1/8 lower. You catch it on the wrong day, you might be an 1/8 higher. But that's generally where we've been. So we haven't seen that spike, but people are getting more comfortable with the interest rate increase. The next thing is going to be the limited inventory we were just talking about. Supply and demand, economics 101, like I have my college professor in my head talking about these economic principles. When there's more people that want something than there is supply of it, the price has to go up, right? That's just the most basic fundamental economics. And that's what we're seeing with the home prices. Even if a home is fairly priced, because there's so many people that want in on that property, it's 300. Well, all right, I'll do 305. Someone else says, all right, well, I'll do 310. Someone else goes, I really want it. I'm doing 325 because I cannot be in this game anymore. I want this house. I've been trying to find one for months, and I know that I need to put in a really strong offer to get that property. And those are the ones you see coming in, like the one you mentioned. Like 90,000 over list price. That's extreme, but I'm seeing like 10 to 20,000 over list. I had one that got accepted last week, 40,000 over the list price. So that, and it actually, if it does close, will be the highest sale in the entire area and set a new precedent. Okay?
I mean, you've got to ask yourself on a scale of 1 to 10 how much you want this house. And it's like I've gone and looked at houses like, yeah. Are you interested in the house? Yeah, but if I lost it, I wouldn't cry. Like, well, on a scale of 1 to 10, 7. Okay. Another one was an 8. I never had a 10. Then again, I'm not really one to give 10 about any. I've had phenomenal 5-star dinners,
right?
And I can't give it a 10 because I'm like, there's always
So I think the big challenge there, and what we're seeing
A
people
9 for
step
me is
up,
like a 10. Yeah.
where people are really stepping up now, Gary, is a lot of home buyers have come into the market, say mid to late last year, to start their journey. They got pre-approved, they got out there into the field, they started looking at properties. Not knowing any better, they started putting in offers on properties. Maybe they put in a couple, but they were lowballing. They were putting in an offer at list price, below list price, because back then you could get an offer entertained. Right. Now you fast forward to now. Their original pre-approval expired. Now they're going into this year, 2023. This is the year for them. They get their pre-approval renewed. Now they don't want to waste it.
How do you prepare yourself then? I mean, do you know from jump you're going to be in a bidding process with other people, and you're prepared to go $20,000 more than what they're listing it for?
So, I mean, the bidding wars is something that you need to expect right now. That's one of the biggest challenges, in the current market is the bidding wars. Everyone thought they were going to stop. I mean, we talked about, that's behind us, and here they are right back.
That was a year ago.
Now it's more ferocious than ever. So how can you prepare yourself as a home buyer? Well, you got to have the right team so that you're mentally prepared. You have the right advisors, like talking to you about what's going on, helping advise you on a deal-by-deal basis. Getting pre-approved early, I mean, that's the easy thing, because if you're pre-approved early, you're a little more nimble. You're a little more flexible through the process. Also, when I do a pre-approval now for a home buyer, I'm really looking at where are they maxed out. Yes, they only want pre-approval for $300. That's their range. But can they afford $325? If the property gets bid up and they need $330, can they do that? So we're doing a little bit more of a thorough pre-approval from the standpoint of exhausting all options of where they're at. So that's number one. Working with that knowledgeable wealth team we talked about, people that have experience in the local market, not somebody that just got their license in the last year or two, but somebody that has, I would say, at least 5 to 10 years experience, so that they've seen a lot, and then be flexible with your housing preferences. A lot of first-time buyers, and you know what? Even you, Gary, have told me, I only want to live in these towns. I'm not willing to go outside of these towns. And that's okay if you have kids or you want certain schools or certain amenities, but if you're a single home buyer or you're a young home buyer or a first-time buyer that has some flexibility, look at different areas. Look at different price ranges. I know you only want your mortgage to be $2,000 a month, but what if you can get your dream home for $2,300 or $2,400? Well, again, are you willing to stretch?
That's everybody's situation is different, because if your nucleus is here, in a certain area where there's schools involved and there's family involved, what you say is designed for probably a single person who. If your job is over there and your home is 30 miles in the other direction, well, that doesn't make any there's no sense.
No, I agree with you, Gary. You don't want to get over your head when it comes to a commute or something, but you know what? Connecticut's not a big state, so there's areas in Connecticut.
No, but the traffic is horrendous.
The traffic can be bad, but what I'm saying is, don't discount certain areas. Don't discount certain towns. Tell your realtor, I work in Hartford. I need somewhere within 30-minute commute of Hartford. And then let them bring you the thing. Don't just say, these are the 3 cities and I'm out. That's it. Because you're wasting your time. You're wasting your realtor's time. You got to have flexibility in this market. That's it.
Folks, you're listening to Mortgage Matters radio show in the Connecticut Real Estate Edge podcast along with Rob Weinberg. I'm Gary Byron. You can check out more information online at www.robgw.com and write this phone number down, 860-413-3938. I'll repeat all of that information more towards the end of the show. All right, Rob. So, what's contributing? What are the contributing factors for these exorbitant, asking prices for these homes?
I would say the number one factor is just the low inventory that we've been talking about.
Supply and demand.
And then to build on that, I want to spend a minute here to talk about the lock-in effect. We touched on it earlier. So the lock-in effect is this it's this phenomenon that people are locked into their homes. They're almost in jail in their property because they feel like they have such a favorable financing on their property. Their mortgage has such excellent terms that they could never replicate that in the current market, whether it be by refinancing or selling their home. So they've made a decision rather than take on financing that's not as favorable, maybe it's a higher interest rate, higher amount of money they have to pay every month. They would rather stick with their great low financing, that low interest rate, that low monthly payment. Maybe it's a mortgage they've been paying on for several years. They may might be paid off in a couple years. They don't want to give that up. Or basically, I should rephrase that by saying it's more important to them to keep the financial house in order than it is to move to their dream home or to reach their next goal. Now, I believe personally that this is a temporary phenomenon. It's only been a couple years so far, and I think eventually the emotions are going to outweigh the financial decision-making, the logic, right? So because their rate is so low right now, because they feel trapped, they've decided that I'm not going to sell my home. I'm just going to stay in it. I'll deal with it. I'll repair it. I'll renovate it, but I'm not moving because I'm not giving up that 2, 3, 4% mortgage to take something on higher. Again, I think that's temporary. That's a big factor, though, and I would just say the other thing that a lot of people aren't aware of, home buyers may not be aware of, is the actual high demand for people looking to buy homes in Connecticut. So if you've lived here for a while, I've lived here now over 10 years, and I'll tell you that Connecticut has never been a place that I've seen that a lot of people have wanted to move to. People have family here. Yes, there's jobs, but it's never been like Florida or California.
It's too expensive to live in Connecticut.
Right, it's exactly. And that's how I always felt, but I see people moving here from other areas. Other high-cost areas. I'm not saying they're moving here from Florida or they're moving here from the Midwest. For the most part, they're moving from the West Coast. I have a family moving down from Alaska right now. You know, they're moving from New Jersey, from high-cost areas, and this doesn't look that bad for them, right? But what you need to realize is that as a home buyer, there is high demand for housing in Connecticut. There is a lot of people that want to buy homes here, people that already live here, and people that are coming in here. So you can say the taxes are high, the prices are high, but the demand speaks for itself.
You know, I'm because I'm looking for a house. This is great timing on this. The pre-approval letter. Why is that so significant? I was pre-approved. Why?
Yeah.
Why were you encouraging me for this?
It's crucial. So in a more subtle market, you can, wiggle your way to a pre-approval. You go see a house, they'll take you in, your realtor will spend some time with you, and then they'll maybe say to you, hey, do you have a pre-approval? Let's get that done, and we can kind of work it out in a couple days. That's okay in a subtle market, I would say. In this market, it's a non-negotiable. It's not even a question. If you go to any real estate agent, any listing agent, anywhere and say, I want to go look at this house, if not the first question, the first 3 questions they're going to ask you, one of them is going to be, are you already pre-approved? If the answer is no, you're not going to be able to see that house. Again, there's so many buyers right now that are pre-approved, that are ready, that have their strategy, that are 100% ready to rock and roll. So they're not going to waste their time taking you if you're not already pre-approved. That's really the bottom line, and you can't even question whether you should or not. Some buyers will say, well, Rob, I got great credit. I got $100,000 in the bank. I make 6 figures at my job, and I got no debt. I'm not getting pre-approved. All right, well, good luck getting a house, because they will not take your word for it. You need to have a lender, a financial institution vouch for you to say we've checked them out and they're going to be good and they're going to be a good fit and they're ready to roll. But with things being so competitive, as you know, you see a house, you need to get an offer in very quickly, sometimes within 24 hours or less. And if you don't have a pre-approval done before you start that process, forget it. You're not going to get the house, guaranteed.
There's different types of mortgages, right? I mean, how do you know which type to get?
Yeah, I mean, there's different types of mortgages. And as a home buyer, it's very difficult for you to navigate on your own all the different loan programs and things that are out there. So your team matters here. Specifically, your mortgage advisor is going to be really, really important to helping you, like, which box do you fit in or what 2 or 3 options do you have? I have a client this morning that came to me and would easily be qualified for a conventional mortgage, but they want a multifamily home. And on a multifamily, they'd have to put a much higher down payment. Okay, but I know of another loan where they have to put only a 3.5% down payment for a multifamily, so that's going to be a better fit, right? So having a mortgage advisor that's nimble and knows how to kind of get you through to figure out what's going to be the best for you based on your goals. What's your monthly payment affordability? How much do you have to put down? That sort of thing. You also want to look at buy down options. So years and decades ago, people didn't really look at these rate buy downs, but now it's kind of a hot keyword that you're hearing a lot of realtors talk about and even some lenders. So there's buy down options that your realtor can help you negotiate where the seller can actually buy your rate down on your mortgage rather than dropping the price of the house, or rather than, giving you money towards specific closing costs, they can actually do a buy down. Okay, it's a strategy that your realtor will need to work with you on because it does require negotiation. But you can also do a buy down yourself where the seller doesn't pay for it and you take money out of your bank account and you pay to buy the rate down. Okay, so for someone that's really, really specific on their monthly payment and wants it as low as possible, these buy down options are something worth considering, whereas a couple years ago, no one talked about them at all. No one really did them. The length of the mortgage is something that's really important and a lot of people have shied away from, but an older generation, many have brought to me the fact that they're more comfortable in a 15-year mortgage or a 20-year mortgage. But what they fail to realize is that comes at a much higher monthly payment than a 30-year mortgage. So generally for first-time home buyers, unless you're super high income with a lot of assets and very, very comfortable, almost every time without exception, we're going to be looking at that 30-year fixed term. That's really the best for most first-time buyers. But you want to evaluate the length of the mortgage depending on what you're looking to do. If you're a retiree, you're looking to pay off your home early or whatnot, it may be a little bit better to look at something that's more short-term. And the last thing is adjustable rates, ARM loans. What should we do with those? Talk to your mortgage advisor about it. See if that makes sense.
Can I get a quick answer? Just a final question here. What advice would you give to somebody who's considering buying a home in today's market?
Number one is be really, really careful and vet out who you're going to do business with as a real estate agent. I've had a lot of people that try to switch agents because they realize the original one wasn't as good as they thought. Number two, get pre-approved early if you can, 3 to 6 months ahead of when you're ready, ideally. Next thing is communicate with everyone.
Sure.
Communicate with your lender, communicate with your realtor, keep those lines of communication open on any and everything going on and questions that you have. And last thing is be patient and flexible with the home search process. It's going to take longer to find that home and go under contract than it might have taken 6 months, a year, a couple years back.
Folks, you've been listening to Mortgage Matters radio show and the Connecticut Real Estate Edge podcast. If you'd like more information on this topic or any of the several others that we discuss here on a weekly basis, it's easy to obtain. Head on over to Rob's website at www.robgw.com. That's robgw.com. If you've got a question that you'd like to have answered, maybe right here on these very airwaves, simply email us at mortgagemattersradioshow@gmail.com. And by the way, if you'd like to schedule a consultation with Rob, that's very easy to do as well. Write this phone number down and give him a buzz first thing on Monday. 860-413-3938. I'll say it again. 860-413-3938. For Rob Weinberg, I'm Gary Byron. Thank you so much for listening to Mortgage Matters Radio Show and the Connecticut Real Estate Edge podcast. Until next weekend, have a good one, everybody. So long.